Recording. Okay, so thank you everyone for being here, and this is a Bybit crash tutorial with a bit of basic trading. Now, looking at those with us online at the moment, I'm seeing quite a few experienced traders here as in the RT community, so you're going to be bored as hell because most of you know all of this. I mean, Adam Stevens, what are you doing here? You know all this. Anyway, mind you, repetition is the mother of learning, so you're bound to learn something new. My OCD is killing me here at the moment. I don't know why this Y of U decided to do a little walkabout. There we go. That's better. So, yeah, we're going to go through where to sign up, setting up the account, talking about the spot accounts and the derivative accounts, the basics of trading, how to actually place trades, and then talking a little bit about leverage and whatnot. Now, I will be putting these videos on YouTube, okay? So I will be having to chop them up, etc. So I'm not going to go too far in depth of the basics of trading, etc. Just the very, very, very basics, because obviously in the RT community we cover the things in much more detail. But I'm getting a billion questions on how to trade on Bybit, so yeah, you guys get all the juicy stuff in the trading pubs anyway. Right, so first of all, where to sign up, how to actually go to Bybit. Now, this is the first thing with crypto shizzle. If you ever type in, let's type in Bybit, etc. There's always a scam lying around, whether you're typing in Binance or Kraken, and scammers will create fake websites or clone a website and change it. So you have to be doubly sure on what you're clicking. So someone could have a website called Bybit, for example. Instead of the I, they could have an L. And with that font size, you could be signing up to the wrong thing and sending money to a scammer. So always be careful. Thankfully, I can't actually see any scam results here, and it looks like the top one. And if you're ever unsure, and you can do two things: you can control plus or minus to really zoom in. You can say, oh yeah, it's Bybit, or hell, you can just copy the address and just pop it into Notepad or something and go, oh yeah, it's fine. People do get conned by that, by the way. And the reason I'm being really anal here is that someone has recently fallen for one of the fake Instagram scams of me. So my accounts on Facebook, Twitter and Insta tend to get cloned about 2 or 3 times a month. And someone sent $3,000 to a scammer thinking it was me. I felt guilty. I felt so bad. So I felt guilty even though I done nothing wrong. It's just that obviously this person trusted me and sent $3,000 thinking he was talking to me. Anyway, I'm constantly posting stuff about that. So that's a scam shizzle. So find Bybit. So let's do it. I'm already signed in, so let's do it on a private window so it doesn't really notice who I am. If you've been in crypto for a while, you're already used to signing up to all sorts of different things. Just go through the normal login process. So sign up, go through, email, password, all that sort of stuff. You have to verify your email, etc., etc. I'm not going to teach you to suck eggs. I think you can all understand that. Then when you get on there, let's go to the account. So obviously, this is almost exactly like Binance. I still have a sneaky suspicion that Binance owns this because this platform is literally identical in almost every way. So if you're familiar with Binance, you'll be familiar with this. So let's first of all start off with the settings type stuff. So if you go to account and security, I'm already breaching. In fact, I'm going to have to edit bits of this because you can see the email address I'm using. That's the first part of CSEC, which I'm really ruining here, but hopefully you RT members are you're not going to hack me, but for YouTube that will be edited out. So let's just go through these in a logical order. You will have to identify yourself. In fact, I'm already level 1 verified. I should be level 2. I just need to get a utility statement. So the first one, you start off in basic. which that's no ID. Level 1 is where you have to give your ID in a selfie, do one of those stupid things where you have to hold it up to your face. Thankfully, it's less glitchy than the Binance one. Sometimes the Binance one doesn't really work. And level 2, you just need proof of address. The annoying thing is I can't find a freaking utility bill, so I'm just waiting until one pops up. But yeah, I mean, most people don't even need to get to level 2 because, I mean, if you are having issues of struggling to withdraw more than 50 Bitcoin a day, they're champagne problems, and you're probably in the wrong place. But anyway, let's go back to account settings. All of it is pretty straightforward. Yeah, I have 3 trusted devices logged in. That's my mobile phone, my crypto designated laptop when I'm doing business trips, and my main station where I'm talking right now. Yep, do not get SMS authentication. So many phones are being cloned these days. Just don't. Get Authy. So if you don't have Authy, get it. It's much better than Google Authenticator. If you lose your phone and you have Google Authenticator, it is an absolute ball ache and a half to re-establish. Whereas Authy is cross-platform, cross-devices, etc. So,
Hi, Mike.
Yo, Mike.
It's Mike. Hey, mate.
What's up?
You know you can do 2FA on one password instead of Authy.
True. I'm still not a fan of 1Password or LastPass and stuff like that, because if someone hacks into your LastPassword via a keylogger, they have access to your whole kingdom.
True.
I just don't like it. That's one single point of failure, and I don't like choke points and bottlenecks in my CSEC. It's just my personal preference, but yeah, it is a good point. So yeah, that's the main thing is really. Anything else here? I don't really care about all the other sort of bits and bobs. Contrary to popular belief, you don't actually have to know every single thing about a trading platform to do well. You just like it's 80-20. I'm going to teach you the 20% of understanding Bybit, which will get you 80% of the profits. I've only been using Bybit in the last, I guess, beginning of March. So it's been basically 2 months. I still don't know all of it, and I don't think I ever will, because I know what I don't need to know everything. Yet I've still made over $800,000 with trading Bybit. So like you don't need to. So that's what. So this hopefully shouldn't take too long. So where to sign up, done that. Setting up the account. That's pretty much it really. In terms of all the boring bits and bobs. Checking the settings. Yeah, I've turned off some of the notifications. I didn't want emails because they kept bothering me. Yeah, this is one, deposits. So I've turned this off. So I've basically, if you send stuff to Bybit, I want it to go to the spot wallet, not the derivatives wallet. So I've just turned that off, and I think I come on to that right now, talking about spot and derivatives. So when you click on the assets tab, you've got a whole, whether you choose the drop down menu or the stuff on the side, it's all the same. So the spot wallet is the wallet, or spot account is what you're using for buying actual tokens. So you can use Bybit just like Binance to go in and buy actual tokens. So as you can see, I own nothing other than barely any BUSD. So that's holding actual tokens. So yeah, if I want to deposit some buzzed, let's say for example, I'll get the address, etc., send it here, and that way it stays in my spot account, and I don't like things to really affect my derivatives account. One of the ways I do my portfolio sort of trading management, etc., is that I keep track of my USD balance going up and down. So if I'm like sending stuff to and from it, I don't want this number being affected. This is just me, my personal preference. You don't have to copy it, but yeah. Now, so that's really the two main accounts. You got like a funding account if you want to do other bits and bobs. I don't really dick around with any of the other stuff. It's just not much point. I use Bybit for one singular purpose, and that's to short the shit out of the markets, or to eventually go long when the markets do start behaving nicely. And like Binance, it gives you really good APIs for random shitcoins that they list. So don't bother. Right, moving on. So spot. Okay, let's talk about the USDT Perpetual and Inverse. So the way that it works is you got really these two. You got a whole bunch of trading things that you can do, from options to futures, etc. I want to keep things simple. Okay, you don't need to know about any of these really, other than USDT Perpetual and Inverse Perpetual. Now the word perpetual means is that you can place a trade and let it run indefinitely. Whereas when you're placing options and futures, there is expiry dates where you have to close or exercise basically your trade will close in a nutshell. So perpetual is what we're playing with. So we're going to focus on USDT Perpetual to begin with, and then later on I'll come back round to Inverse. If I've forgotten, please remind me. But what this means is that you can fund your Bybit trading account, let's call it, with USDT as collateral. Sorry, in fact, let's just go back to my Derivs account here. USDT, you can put whatever money in here, and then you can place trades and it'll use this collateral, whatever's in this USDT wallet, to place and facilitate your trades. So as it says here, position margin. So every time you place a trade, it's effectively going to take it simply apportions a chunk of your wallet to run that trade, and every trade will have a margin requirement, which I'll talk about in a minute. So it means that right now with the trades I'm running, I've basically used up $1 million worth of margin, and I've got 700 grand left if I want to place any other trade. So and the way I trade, I never go over the top. I'm only ever risking 0.25% max risk per trade. So I'm literally barely scratching the surface in terms of the amount of risk I can take. But you don't need crazy amounts of risk, as you've seen. For those who've been here in the RT community, you've seen all of the trades I've been placing on Telegram and all of the joys, and it's been great getting all those emails. So Alan G, thanks for your email today. A cracking return, mate. Anywho, so let's get back to USDT. Yeah, so that's, in fact, I could talk about that quickly. Inverse. So hopefully you understand the USDT part. Now the inverse bit is, I think, pretty damn cool for a bull market, not a bear market. So what it means is that you can deposit any of these main cryptos here, so Bitcoin, ADA, and any of these. And let's take ETH for example. I can deposit a whole bunch of ETH into this Inverse Perpetual wallet, and that Ether will be used as collateral for trades. Now you can only place trades on Ether, not anything else. Okay, so this is why I'm not using it at the moment, because at the moment I don't want to own any crypto. Crypto, for those watching this in the future, this is the 9th of May. Basically, everything's shitting its pants right now. Pretty much all cryptos, as I talk, have breached major base support levels. Bitcoin's entering sort of, it looks like my little white hole's about to be filled here. Pretty much every major crypto other than Luna there, base support has been breached. Binance has had an absolute nightmare, and that is one hell of a head and shoulders. If that gets breached, God, Binance is toast. Yeah, so at the moment I don't want to own, I literally don't own any crypto, so that's why I don't use this. But the reason I say this is a great bull market opportunity is because at the moment, let's just say I've got, how much is in here, 1.8 mil in USDT. If we're in a bull market, that tether is not appreciating in price, obviously. It's just going to sat there being pegged to the dollar. And the dollar, as we know, is a shrinking ice cube melting in the Sahara Desert, with the amount of the dollars that the Federal Reserve are inflating away. So in a bull market, I will not be using USDT I'll probably have a little bit in here just so I have flexibility, so I can short or go long on a whole range of stuff. But in a bull market, you know, I reckon I could probably take out, you know, call it 700 grand from this Tether wallet and still trade the way that I normally trade without getting any issues. So, which means I can, I could use that 700k and put it into Ether, you know, and that way the collateral I'm using to trade will continue to go up as I'm trading it. So in a bull market, the collateral will go up in value, and the trades, hopefully I'm going long, will also go up. Or even you can hedge it. So, you know, in a bull market when things are going up, if there are opportunities where you think, you know, you could short it, let's say there's like a temporary collapse like this, you could short it at the same time. And, you know, I'm looking forward to using these inverse perpetual wallets. But for the moment, in a bear market, I don't want to touch that shit. I'm just in Tether. Now, when so the way you get into this is you simply click on the derivatives tab, hover over it, then click USDT perpetual, and it'll take you to the main trading screen. And this is where you're going to live. This is where I pretty much live. I literally only check this number here just to have a sort of barometer of how well the trades are doing or not. That's the only time I look at it. And as I said in a previous trading, but I think probably last week, is that when you have a whole board of trades on, like in this case, I've got how many trades? I don't know, 10, more than 10, whatever. It's hard to keep track of each individual trade, right? However, by just keeping an eye on this floating profit and loss, I can sort of get a nice feeling of what the market is doing. So the fact that this has gone up, 10 grand in the last 5 minutes, whatever, means that the markets are still just slowly moving down, because obviously I'm shorting everything at the moment. If all of a sudden this would go to 155 down to, let's say, to 100k, I'd know that all of a sudden there's a pullback. And for the moment, at some point during this trading, this session, I think I may actually end up closing all trades. I'm getting very snatchy.
If you ask me why I joined this, it's because I want to see what happens at 2:30. If you're on that page, that would be interesting.
Wait a minute. What's happening at 2:30? So
US markets.
Yeah. Sorry?
US markets.
Bloody. Normally it's 2 o'clock, but obviously it changes in the time of the year. I thought for a moment you were wondering. No, there's nothing going on. Yeah, so sometimes I look at this as well, the Forex Factory calendar. It shows you any crazy sort of announcements. So CP Lie figures are out on Wednesday, 8:30 in the morning. But other than that, there's nothing news-wise this week. Last week was just cray-cray. Interest rates, unemployment, everything. Right, so before we get on to that, actually, when the US markets open, they've all been drifting down. So, this morning, this was a big fat red candle. It looks like it's had a temporary pullback. So, interesting. Just looking at the dollar. Dollar seems to be had a bit of a pullback. It looks like it's going back up. Yeah, I don't think it's going to be pretty. I think
it's interesting to see as a bit of a peeping Tom how it affects them. Lots of open leverage trades.
Yes, exactly. Because obviously whatever stocks do, Bitcoin and Ether are going to follow, and then obviously if Bitcoin and Ether start to pull back, all of my trades are going to pull back, and at some point, so I guess I'm fasting forward. This is a execution trade tip here. If you've got a load of bunch of trades like this, if you want to close everything, you click close. Oh fuck! Shit! I just closed all trades. I thought it'd give me a confirmation sign. Oh dear Lord, I'm an idiot. Well, at least I've snatched 175 grand worth of trades.
Oh mate.
I've literally dropped a bomb there. At least I took a screenshot of this, so we can actually. It's not a. That's annoying. Right. I still, even after all these years, I struggle to present and teach at the same time. At least I can now concentrate on the lesson.
You want to let everyone on Telegram know that you've snatched?
Oh, yeah. Let's just stupid. Can't type now. Stupid me accidentally closed all trades doing a Bybit tutorial. Shit. Will continue to give signals as though the trades were active. Right, what I can do is just because I'm still bearish, I still think a lot of the things are going to fall. No, actually, I'm going to continue. This will end up just being a live trading session instead of a tutorial. Let's carry on with this. Basics of trading. God, I'm an idiot.
Hey, surely you just go and open the positions again.
Yeah, I can, and I will. That's what I was planning to do, just placing trades and whatnot. So let's skip to the basics of trading very, very quickly. So you'll see that I always use Trading View in conjunction with Bybit. Although Bybit uses Trading View charts, do not use these charts. They are the window is far too small, and I find it's a bit of a ball ache clicking expand and what you just don't get the right picture. It's just not user intuitive. So I always use Trading View to execute on the trades. To view my positions, etc., and then Bybit to execute the trades. So try and do that. In terms of the other thing you need to be wary of is every chart will be slightly different. So in this list down here, I have BTC USD, but this is from Coinbase. So this price will be different to the price that Bybit is showing. If I get back to that trade there. And so what I've done is I've created on TradingView a separate section, and this top section here is just the Bybit one. So the way you do that is you can right click anywhere on here and create add section, and then you can add symbols into it. And when you're adding a symbol into it, let's say you want to add Bitcoin, let's say. So you go to Bitcoin USDT. You already know it's a tether based one, and then look for the Bybit one, and then it always says perpetual contract at the end of it. Then add that. So this list here are the Bybit perpetual contract ones. So they are that, like for that chart, will be slightly different than the Ether one I have on my other chart, because you're placing trades on Bybit, right? So you want to know what the chart looks like on Bybit, and it may be a few dollars or a few pennies depending on what you're looking at, but it does make a difference. Also, the really annoying thing here is, let's take placing trades on Bitcoin Ether, there's such big numbers. Let's look at something which is around $1. It's just slightly easier to look at. I think Sand is around $1. Yeah, screw that. So Sand, and I'm going to place the smallest, because I'll be deleting this trade as soon as this tutorial is over. Can I do one short? There we go. Right. I'll talk about the mechanics of how to place a trade in a second. So you have this thing called mark price. Now, you have to understand that with Bybit, it's a closed loop environment to a degree. So let's say you have the whole world. Oopsie, I need a pen here. You have the whole world. And obviously crypto is all global and everyone's trading it everywhere. And because of that, you have, the market price, or let's call it the spot price, because that's what it is, the spot price. But the thing is, over, let's say here, we have Bybit. And Bybit has a whole bunch of assets that they're letting us trade via these perpetual contracts, etc. And so the prices you see here in Bybit are slightly different to the global spot price by pennies or dollars, because Bybit still has to make its profits. It makes its money via fees and commissions and whatnot. But also, all of the trading that we do in Bybit has zero effect on the real world market. So I could be a whale, right, and come on here and place, a $50 million short on Bitcoin. It won't have any effect on the real world market. So what Bybit has to do is create this sort of internal price of each asset, and that's what it calls the mark price. Where's my mouse gone? And the mark price is here. And so it is slightly different. So if you look at that, it's 185. Yeah. So look at that price there compared to the price of sand at the top over here. So it's 1.85105, and there's a bit of a difference there. Only pennies, but it's still a difference. So when you're looking at the profit and loss over here, it's using it by the mark price. And the annoying thing is that when you look at your P&L over on the derivatives side over here, it uses a different. It uses actual. This shows you the P&L minus some of the fees, etc. Because I went through a stage a while back, going, holy shit, where's all my money? I'm losing like 20%, 10 to 20%, because if you were to add up, for example, let's take this board of trades. If you were to add up all of the P&L on this column here, that number would be very different to the number you saw on your floating P&L. Like 10% out. No joke. And it's normally to the downside. So these days, you just look at this. This is really the number you need to care about, because that's what is going to end up in your wallet. What was I saying? Yeah, let's talk.
It was on your order book as well, Siam. So when you look at your order book on the trading screen, you'll see the yellow flag price there in the middle of the order book.
Sorry. Sorry, where are you talking about?
The order book next to the
Oops, sorry,
in the middle.
Sorry.
So you see.
Oh, here. Yeah. Sorry. Yes. Yeah.
Yeah. So there's the spot price going up and down in green and red in the middle there, but on the right there's the flag, and that is your.
Oh yeah, the mark price.
That's the funding rate.
Yeah.
Do with your funding rate, and that funding rate, my understanding is it changes every 8 hours or something, or you get charged every 8 hours.
Yes, because it depending on which where you're trading, it sometimes shorters get paid pennies, or you get a little bit of fees for facilitating the trade. It depends on which side of the trade you are, but sometimes you make a little bit of a fee, and sometimes you have to pay a little bit of a fee. But yeah, but long story short, you don't need to worry too much about it. It is literally pennies. In fact, I've been placing pretty high trading volumes, and it's negligible in terms of the fees you get. It all gets bundled up into your floating P&L anyway. So let's get back to the actual trading side. I want to get into the basics of trading, because I'm imagining someone is watching this on YouTube, doesn't know much about trading. So when you're looking at a trade and you want to, let's say, place a trade, I don't know, let's say we want to go long. It looks like a little pullback, it's inbound. Let's say we're going to play with Ether. No, let's play something a little simpler, smaller.
Sam?
Yes.
Can we have a quick take on the markets now they've opened? On your take?
No, mate. Sorry, not for. I must get this.
Okay, fair enough.
Yeah. It just very quickly. Nothing. Barely anything at the moment in terms of the Dow. So yeah. But yeah, I must continue with this tutorial, bud. Sorry, mate. Shit, what was I talking about? Oh yeah, let's try and place a quick trade. So let's take sand again. It allows us to place some nice small trades. So what I tend to do, well, I've got a whole bunch of different methods, as you know, and like different trading methods or strategies. That we're not going to go into them at the moment. But the principle is that you always have you're let's say for example you have a system that says right, you need to buy right now. Okay, fine. So you're gonna aim to buy whatever at market price around here. First of all, you then need to know where your stop loss is. Again, I'm not going to go into the strategies or etc. But let's just say you want to put your stop loss outside of any noise. So if you're going long and think it's going to go up, let's just say for this example, you want to put it below that wick. So below the double O number here. So you don't want it on a big psychological magnet there. So you're just going to put it below, somewhere like so. So when I'm eyeing up a trade, I'll then go, right, I want to go in at market, let's say, and I want to, in fact, before that, I'm just going to close this trade because we're going to go long now. I always then remember the stop loss. So this level, you can see the crosshairs. It says my stop loss is going to go at 1.783. 1.783, and I just remember that number, 1.783. So I then go over to here. I need to find sand. 1.783. 1.783. And then I normally just hit one. Let's just put, so you put the position size in first. Let's just put 1 to make things simple. 1.783. You then need to put a stop loss. So we're going long. So you click buy. It says buy long. That makes no sense. With take profit / stop loss. So click that, and I go straight to the stop loss bit. Now normally, just to populate some of the figures, just to save me from fat fingering the keys, I'll just click one of these, 5, 10%, something like that. And then I'll just edit the last numbers. So again, my ship memory hasn't helped. 1.783. So I then type in 1.783. There we go. Now, this is where it helps, because it'll tell you blah blah blah. Obviously, it's doing this via the mark price, not the actual real price. It will show you how much your. Oh yeah, so quick tip: if you're placing stop loss, try and give it an extra bit of a buffer, just to it's always worth having a bit of a buffer, just to make sure the mark price isn't going to screw you over, etc. And also, if you put it really too close to levels, you'll probably get stop hunted. So yeah, just give yourself always a little bit of a buffer. So 1.7, yeah. Just leave it like that for the moment. But the cool thing is it tells you how much money you're going to lose if the trade were to bomb out straight away. So at this point here, it says I'm going to lose 9 pence, basically 0.09 USDT, which is great. Now, this is sort of jumping forwards of why leverage isn't scary when you know what you're doing. A lot of people will look at the amount of leverage you can place with this trade, up to 50x leverage or 2x leverage, etc. But it's a bit of a misnomer. The leverage basically dictates how much margin your account will stump up to place that trade. That's it. So what it basically means is if you were to whack it up to 50x, it means you'll be able to place really huge trades, but with not much money in your account. But what it means is that you're going to get stopped out pretty fast, because the margin requirement. How can I say this properly? Not necessarily stopped out with the market price, but your account will end up just underwater. You don't want high leverage, but I'm going to show you what this means. So for example, let's just say we leave it at 5x long, okay? And I'm going to put a little bit of size on this trade just to show you what I mean. Okay, so here, if I buy, I'm going long on 100 sand. It means with that stop loss, our expected loss is going to be $10, okay? So I click open long, gives me this little confirmation box. And it's worth not clicking that, because it is actually quite good to do a last minute idiot check. Because what you can do is see if everything is correct, and also just for idiot purposes, check that the liquidation price is below your stop loss if you're going long. If you're going short, it needs to be above. So here, your stop loss is 1.78, but your liquidation price is 1.52 miles away. So yeah, all is good. So you're placing the trade is then placed. Pretty cool. Now, if so for this trade, by the way, the order value was 189 quid. Okay, let's just close that trade. It was 189 quid roughly. If I click, say, 10x for long, and I try and place the same trade. Oh, sorry, I forgot to take a screenshot. It's the amount of. Sorry, let's do it this way. Let's do that again. Open long. Yep. Fine. Okay. So look at the position margin. Okay. So although the trade is $190 in value, what's happened is that the position margin, it's sort of set aside $38.19 from my account to facilitate the trade, and that's what's called the position margin. And all that happens if you use higher leverage, it just means you use less margin. That is literally all the leverage does. So let's close the trade again. And by the way, every time I close it, you close it by the close by, and you can do a limit. So you're putting in a set price where you want it to close. I wouldn't bother with that one. Just click market. So you're closing it at market price. So straight away, basically. See, when I clicked earlier, when I clicked the close all button, I thought I was going to have this little confirmation window. Evidently it didn't. So that's a good learning point. And here's the cool thing. You can either close all of the trade, or you can close half of the trade, or a quarter, or you can actually type in how much of the sand you want to close. So sometimes if you want to take half profits off the table, you can just go to market 50, boom, half the profits taken off the table. So let's just close that. So remember, it was $38. If I then did this to 10x and then place the same trade, we've got half the. So before it's $38 in margin, now it's only $19. Everything else is the same. I've got the same stop loss, same everything else. If I lose this trade, I'm still losing around $10. Obviously, the market price is moving. That's why it's changed a bit. But nothing else changes. It's just the margin requirements change. So that is why leverage isn't really that scary. So if I was going to, let's say the market is fully recovered, and we start having a bit of a boom market, then what I could probably do is try and optimize my account. And the way I could optimize my account is maybe, if I go back to it, so it's annoying I don't have my trades live, but hey ho. Like as you saw earlier today, I had all my trades on and about 700 grand just sat there doing nothing, right? Well, what I could do in the future, if I don't want so much tether just lying around doing nothing, and I want to optimize my money as much as possible and try and have as much in these inverse accounts instead of the tether one, is I could, one, take away a lot of the surplus that I don't need, but two, instead of 5x leverage, do say 10x leverage. So I don't actually need that much money. So that way I can get more of my money working for me and still trade the same way. So that's what I will do in a bull market, in a confirmed bull market, not anytime soon. But yeah, so I keep losing my position here. There we go. Yes, go James.
That leverage, you can change that with a live trade. Did you know that?
Yes, you can. Every time you change it, it's done per asset, by the way. So if I go to sand, whoopsie, if I type in sand, yeah, you can change it on a live trade. So and then it affects the whole of the thing. So you can see that the position requirement has changed, and every time you change this, so too does the liquidation price. Okay, so this is what I mean by you can really get in trouble. So let's just go back to 5x, and I'll show you something. This, I know this is really boring, but it's important to know, folks, because this is where most people actually blow up their accounts by not understanding this. So obviously, I've got a relatively big chunk of money in this account. So it's saying that, if suddenly everything went wrong, like the liquidation price is miles away, right? The stop loss we've got is sat there at, we didn't put a stop loss in. I don't know, let's just put 1.85. There we go, just any random one. So the stop loss is 1.85, but the liquidation price, this is where if the price were to go down there, and let's say you didn't have a stop, okay, and it had no stop. If the market price suddenly went down to 1.5370, you'd have what's called a margin call, and your account would just close the trade automatically, whether you have a stop loss or not. Now the thing is, the higher the leverage you have, the less of a buffer you have with your liquidation price. So here at 5x, our liquidation price is at 1.570. If I then double this up to say 10x, it's now 1.72. If I now go to, screw it, 50x, it's now 1.87. It's pretty much right up to market. So look at the price. So the price here is 1.87. So yeah, I can have 50x leverage, but if the market price goes down even basically $1, the trade is bombed out. But look at the position margin. It's only, to have the same trade, to buy 100 sand, it's only used $3.90. You do not want crazy leverage. In fact, just for shits and giggles, I'm going to leave that there and hope that we get a margin call. Because I've never had a margin call on Bybit. I know on FXCM, I've used FXCM for about 18 years now. No, probably about 12 years actually. That has a very chilling when you get margin called, and it's not nice.
So does Bybit have that noise?
I don't know. So yeah, I trade very, very sensibly on my when I do things properly. So yeah, I doubt I'll ever hear it, which is why I sort of want this to go down now and bang us out. Can we get any higher leverage?
Siam?
Yes, hi Benny.
When we get this margin call, for in this instance, how much you lose? Is it the position margin that you will lose?
No, you'll lose whatever the P&L is. So margin calls aren't actually that bad. All it's going to do, it'll kill your trade, whether your trade is in profit or not. But most likely it will be obviously negative. But whatever your unrealized, your floating losses are. So,
Right.
I'm just going to jump this onto a
It's
lower.
worth mentioning the differences isolated and cross margin.
Yeah, I'm coming on to that. So here's the thing with all my trades. Every time you see me place out a trade, I will always be on isolated margin. It doesn't make too much of a difference for me because I'm quite calculated in how I trade, but it is important to note. So if we got a liquidation notice. No sound. That's annoying. Silent but deadly. But yeah, the market. Yeah, we just got margin called basically. But all I lost, I didn't lose my whole account. I just lost whatever the floating P&L is. I still got the. Well, I hope I still. Yeah, I still got all the money in the account. So let's talk about this. Isolated, so the margins, cross and isolated. Now you can read all of this, but the quick answer is that with isolated, in terms of the margin requirements, it is per position, as in per symbol. So like we were playing with, let's have a look at this shitcoin, GMT, stepping. So I could place a trade, and obviously when I place a trade, let's buy that. Let's just short this for a moment. Now, let's say I didn't have a stop loss. Really, this isolated cross thing is for people like if you use stop losses, none of these really make a difference. But if you don't use stop losses, you definitely want to be on isolated, because what could happen is that let's say GMT runs away against you. What will happen is that this trade, and you get margin called based on this. Let's say, it hits liquidation price. It will only kill this GMT trade. Okay, so every single symbol, so GMT, USDT, that will have its own liquidation price. When you're trading with cross, so again with isolated, the amount of position margin you have dictates your liquidation price. So for example, if I added more position margin into this, my liquidation price will go down. So here, that's my liquidation price there. If I added, say, 50% more margin, boom, I'd have a far higher liquidation price. I'm shorting this, by the way. That's why. So I've got more buffer. So that's why it went up. So yeah. So if things are getting tight, you can always add more margin. You can only take margin away of extra margin. So if you've added margin, you can then take that away if you want, but you can't take away what's originally there. So as you can see here, for this trade, I've used 46 cents worth of margin. But yeah. So that's the isolated. So I just leave it on isolated. With the way that we trade, doesn't really matter. But I think it's always worth doing, because if you have cross margin, what it does is it uses your whole account as the instead of having individual pots, etc. It will use your whole account. So now we're on cross. It's saying that the liquidation price is like 199. It's freaking miles away, because it's using my whole account to cover that. And so let's say you had a whole bank of trades like this, and you're on cross margin, and all of a sudden one of the trades goes in the wrong direction in a really bad way. One bad trade could kill, like wipe out all the profits and of every other good trade, if that makes sense. So always have it on isolated. Just a top tip. In fact, whilst we're here, let's go through what some of these mean. So contracts, that's what we're trading. Quantity, that's how much GMT we're shorting right now. If it's red, it means you're shorting. If it's green, it means you're going long. That's the value of the trade, or that's the value of each GMT. Entry price, yep. Mark price, yeah. Very similar, it's about 20 cents off. Liquidation price, it's fine. Position margin, we've talked about. Unrealized P&L, this is your floating profits. Okay, floating profits or losses. So right now it's pretty much break even. Now, this percentage bit confused me to begin with. I couldn't work it out. So it's good that I took this screenshot actually. Before we go any further, I just want to have a little look, see. Yeah, things are having a bit of a pullback anyway. Probably wasn't a bad time to close all trades. I do want to get back in the market though. I really do. I will. Oh, look at that! S&P's gap down. Oh, this is going to be glorious. Die, markets, die. Yeah, so I couldn't work it out. But the easy way to do that is let's just focus on one of these. In fact, yeah, here's GMT, previous trade. Okay. So this is where I'm getting my little annotator pen out. So you can see this GMT trade. That was the position size. So I was basically shorting 175,000 GMT tokens. The value of the whole trade was worth that. Obviously, you've got the entry, mark, liquidation price. Yep, that's fine. Now the position margin. So my account had basically stumped up. So it's basically taken 90 grand from my main pot and put it aside and just basically put it in the GMT pot, right? So if all went wrong, only that margin. Well, in fact, I wouldn't even lose that. What you lose if you get margin called is the floating P&L. Now the thing that confused me was this bit here, this percentage bit. I couldn't work it out until I had a proper look at it, because it says here that I'm 58.93% up, but based on up on what? Obviously the price hadn't gone up. Gone down 58%, because look, I shorted it at 2.57, but the price at this point was 2.27. That's like a 2% drop off the top of my head. So what this means is that the profit here, the 53k, is the profit based from the position margin. That's all it is. So in other words, this this percentage thing is pretty much rubbish to us in many cases. Like, you really don't need to look at it, but all it's showing you is that what it's saying is that you've stumped up 90 grand to facilitate this trade, and right now you're 53k up, so yeah, you're 58% up, so to speak. Now, although I say it's useless, I guess there is one way that you can use it as a benchmark. Normally, when this gets sort of above 10%, I then start to see, can I move the stop loss a little bit? Because if you're 10% up in profit, so let's look at Ether, this one here actually. Shorted it here.
Sorry, Sam. Can I disturb you? 58% is the percentage times your leverage.
Percentage, yeah. So it's saying, yeah. So
the percent the price moved times your leverage.
No. So it's got nothing to do with the price. It's basically saying you've stumped up $90,000 to place this trade, and right now you're 53k up, and 53k is 58% of that 90k.
If you calculate the price you bought it at or sell it at,
yeah,
with the market price, it's exactly 11%, and times your leverage 5 times, it's 58%.
Ah, cool. It works both ways then.
11.77%.
Cool. Oh, it must work both ways. Yeah. So yeah, thank you for that. You learn something every day. But the thing is, the way I use it is that when you get to about 10%, I then go, okay, the market has obviously moved. Let's take this Ether trade here. This trade is almost 10% up. I then go, oh, okay, evidently that trade has gone in my favor. So is there a way that I can move the stop? Not necessarily to break even, but can I reduce it a bit and, just take some risk off the table? Normally, when a trade gets to about sort of 20%, I mean, let's look at this Sol trade here. This is 17 here. Normally around sort of 20% is where the market's moved far enough that you can actually move to break even. Like here, we shorted Sol at 73. The market price is there. So yeah, even if you move your stop back right down to 73.91, you'd still give the market plenty of space to breathe. So for example, if we look at Sol, oh, actually, sorry, I can't help but look at the markets. So where's Sol? Sol. There we go. Where were we? Was it this? We shorted it at 73.91. Is it these figures here? 73. No. Let's just put this 73.90, something like that. And then the stop loss we had at that point in time was 75.67. 75.67, something like that. So wherever this trade, I don't know, I guess it would have been on this number there, yeah. So when I placed that trade, it would have been on this bar, and obviously you can see that I put my stop loss just above the wick there. The market moved down in profit, and so at this point here, yes, it's not enough to really lock in profits, but you can sensibly, at least move it there, or if you, it's a bit close, but you could go to break even, take all your risk off the table, and you're not suffocating the trade too much. So yeah, normally I just use that as a rule of thumb when you get to about sort of 20%. So let's zoom in again. Where else? What else? So this daily realized P&L is how much profit, actual profit, you've locked in and banked over the last, I think, 24 hours, or it could be midnight to midnight. Again, I'm not too sure. And ultimately, you don't really know. You don't need to know. Sorry. So, for example, that GMT trade that we've just placed as an example here, you can see my daily realized P&L is 54 grand on GMT, and that's pretty much very close. Yeah, because that's when I hit the close all. Such a muppet. But yeah, so that's that. The TP/SL is basically your stop loss or take profit. So in here you can add in a stop loss and also a take profit. So for example, if you go back to GMT, we're short. Are we shorting that now? Yes, we are. So if I wanted to, let's say, have a take profit down here, I know you could say, right, I think support is around here or on that $2 level. So I want to take profit at $2.05. You can simply come onto here, click this edit button here on the TPSL and go, right, I want to take profit at 2.05. And it'll tell you how much you're going to make. You're going to make 25 cents pretty much. So on this particular trade. So yeah, no matter how small your account is, you can still trade. As you can see here, look, just buying and selling 1 GMT, it's only used 23 cents. So even if you have a $100 account, you can still trade, yeah, and have some fun on Bybit. So the ADL is about if, basically this is for, with my very limited knowledge, when your account has a margin call and starts liquidating trades, it basically judges each trade by how big it is and in which order to liquidate your trades. So it has a smart way of how it liquidates your trades. But if you trade properly, like we do in RT, this will never be an issue. Same with auto margin replenishment. Like these two things are because the whole market is full of degens that don't know what they're doing, and that they're placing trades at 50x leverage or whatever. In fact, before I go any further, I need to make sure I put these back to 5. Yeah, so you don't need to worry about that. And also, by the way, the margin requirement, sorry, the cross and isolated, this margin mode is per thing. Okay, so when you trade something new for the very first time, then you'll have to, like, for example, I don't think I've ever traded Curve, and it defaults to cross 10x 10x. So, and this is the thing. Let's say I wanted to trade this. Okay, so let's just take Curve. Let's find it on the trading view. So don't always find the Bybit version. And I'm just curious, actually, how's it doing for price? Oh, not very well, by the looks of it. So the first thing is that always get it to isolated. For me personally, I just five times leverage for what I do is pretty sensible. And then also, this is only for the bigger accounts that you'll need to do this. But this little cog over here on the right hand side, you'll need to click this and go to risk limits. So the risk limits basically show you how much you can risk. So what it's saying here is that at the moment I won't be able to buy or sell more than $100,000 worth of Curve, CRV. So what I've had to do with a lot of my stuff is whack it up, and you can really. But the thing is, the higher you whack this up, the higher the maintenance margin and the initial margin that you have to stump up. So at the moment, if I place a trade, I'm only having to stump up 4%. If I whack this up from the 100k to a million, I'd have to stump up 13%. But again, it doesn't really matter too much if you're trading sensibly. So that's that. Light mode, yeah. This I much prefer to have the take profit and stop loss on the entire position. So what this means is that, let's say I'm placing a trade. Let's, for example, like sushi, right? Or if I'm placing a trade on any low liquidity pair, I'll show you. I mean, here it's only like 9 million in the last 24 hours of turnover. It doesn't mean how much liquidity it has. The way you do that is if you then go straight across to 100%, it'll say that the maximum order size I can have on sushi, as in per individual order, is only 20k. So for myself, when I normally place a trade, and for example, let's look at sushi. I'll show you what I mean. So let's get to the 4-hour chart, which is my normal hunting ground. Let's say I wanted to go long right at market, and I wanted my stop loss I know down here, 1.88. So I'm going to go long, 1.88. So look at this. It's saying that the maximum risk I can have is $1,300. I can't put any more. I can't just type, 50,000. And then, maybe I could actually. Wait a minute. I've got a feeling it'll default back to whatever 100% was. Yeah, there we go. Because so maximum 100,000 sushi per order. So what this means is that if I end up having to click this button like 10 times. So if I'm trying to find out what 0.25% max risk is on my account, let's say I've got I don't know, let's just, for example, say I've got that times, so that's 1%, divide that by 4. So $10,000 is 0.25%. So in order to get my full $10,000 in, I'd have to basically click long, so I'd have to open that and then keep on clicking it. But the cool thing is, if I've set my stop loss up for the first one, every time I click open long, open long, open long, it'll all go under the same stop loss, which is why I like having TP and SL on the entire position. Otherwise, I'd have to keep putting in the same bloody stop loss every time I buy. Notifications. I turned sound and notification off. Maybe the margin call would have had some sort of ding dong bell. Who knows? Hedge mode means you can trade up and down at the same time. It's probably worth doing. Maybe actually no. For most people, 99% of people watching this, don't do it. Just if you're going to short it, just short it. Don't do longs and shorts at the same time. It will get very confusing. So that's that. You can also close a position by clicking the close bit here and going on to whatever, but I just prefer to, if I'm going to close a position, I'll literally go to the trade. Let's say I want to close AVAX, and I'll just click market and then close the trade. What else is there? Am I missing anything on this trade? Nope. Yeah, I guess if you wanted to find out which has the most liquidity, just go into any asset, click 100%, as in most liquidity per order, and it will show you. So here on sushi, the maximum trade I can place is only sort of 20k order value per trade. Whereas if I was going to click on Bitcoin and click 100%, I could place a trade which is $3.3 million. So that's obviously where all the volume is. The 24-hour turnover doesn't necessarily show you how much volume it has. So, for example, GMT, if I clicked 100%, it's still only 80k per trade, compared to Bitcoin, which is not as much. So that's really the bare bones of it all. Unfortunately, so Bybit is very good and it's incredibly shit in many ways. The incredibly shitness of it all is the closed P&L. Oh, like the trade tracking, trade monitoring side to it all. So when you have trades up and running, oh dear Lord, it will be on the positions tab. When you close trades, like what I would like to see is a very similar trade, similar board going, look, all of these are my closed trades and I closed for 23 grand profit for Ether, etc. But when I click on close P&L, look at the apps, it's a mess because it only does it per symbol. So it's showing, like here, all the times I've I've gone long or shorted. Oh yeah, I've just been shorting today. It's just frustrating. There's no way that you can see like a similar sort of board of trades for all symbols. You have to do it per thing. So if I go to Ether and then close P&L, it will show me all of the stuff for that. So 23 grand, 8 grand. And it will show you over the last, I think, 24 hours, I think, off the top of my head. No, actually, maybe. See, that's interesting because I have placed trades on Ether before the 5th of May, or was that? Wait a minute, that's the month, isn't it? So 5th of April. I'm pretty sure I placed trades on Ether before 5th of April. But yeah, you can see a relative history, maybe a relative history of all my Ether trades. So just on Ether today. So if we take all of my trades to, so today 23 grand, 8, 6, 23, 112, 5. Haven't really lost much on Ether actually. It's been quite nice to me. The active, yeah, like the rest of this stuff is just crap. Obviously, every time you're opening and closing trades, it's opening lots of individual teeny weeny trades. So this is useless to us. Order history, pretty much useless to us. Yeah, so that's really frustrating. Whereas on FXEM, it was much better. It would show you the same sort of picture, but on the closed tab. Which leads us to sort of tracking and maintaining your trades. Again, it's a bag of balls. It really is. You have to go to derivatives account, go to history, and then you have to. No. Sorry. Derivatives account, history. No. See, even I every time I do this, I struggle. Maybe it's the spot account. And then history. Let's try that. That's better. Yeah. So that's just a recap. Go to your spot account. Then click history. Then you can get account details and all sorts of stuff. So your deposit history to withdrawal history, transfer, fiat, yeah, all sorts of stuff. But in terms of no, I'm trying to find my close, like P&L. Is here some? One second. There's another way to do this. Over on the left, I think if you go to, one second, let me find this. Orders. There we go. That's the bit. That's what I was looking for. Okay. So go back to your derivatives account, and then on orders. Okay. That is really not user intuitive at all. You click orders. Then you can go to derivatives account, close P&L, and then you can extract an CSV. So that is on the inverse perpetual. That was when I was playing around with the inverse stuff, and annoyingly it doesn't show you for all symbols. So you literally then have to click ADA over search period, and it'll show you all of the trades are placed on ADA. So ADA again at the bottom is quite helpful because it shows you like made 26 grand on ADA between whatever, but it's still really unhelpful at the same time. The only way to get a full overview is where if you just go to export last 7 days or whatever search function, and then it will literally just download a whole CSV of all your trades. That's the only way you can do it. So, for example, if we do the last 30 days, export now, exporting, doesn't normally take that long. Mind you, I've placed a lot of trades. That's probably why it's taking a fair while. And whilst that's doing that, I'm just going to have a little sneaky peek at what's going on over here. Dollar, yeah, it's still going up. FTSE is continuing back down. Dollar, as in the Dow, still fanning around. Hasn't really reacted as I thought. I actually thought that the indices would actually gap down, like the S&P 500 has. What about the Nasdaq? What's the Nas doing? Nas. Come on, where's N? Am I being blind here? Oh, yeah, my mouse is right over it. Nasdaq, high test. Looking pretty grim. Anywho, how's my export doing? Yep, so there we go. You download it, and it will just literally, some random thing. Just do that. You can open up the CSV, and yeah, as I said, it's really not helpful at all just doing stuff like this. So what I like to do when I'm sort of doing my own accounting is I straight away just Control X, Control V. I always like having the time on the far left. Just delete that, and then you can sort of expand stuff. So entry price, exit price. So when you're doing your own logging and seeing how things are going, you can get rid of some of these. Like for example, this trade column is irrelevant. Doesn't really help. Contracts, that's what you're trading. You know, Tezos, Axie, time of the day, long or short. If you're looking, you know, for stats between how profitable are you between longs and shorts. I mean, these days everything is a bear market, so all of these trades are going to be short. So we can get rid of that column. Doesn't really help us. Sorry, let's get to the top. Delete. There we go. Quantity, yeah, it doesn't really help. How many trades, you know, how much sushi I'm buying or selling, get rid of that. Entry exit price, yeah, maybe. But if you're doing like, really, it's the close P&L thing that you're really caring about. And what you can then do, and I do this, is you can block it out by days. So it's probably worth, you know, doing something like that. So that's today, that's yesterday, etc. Or do it by months maybe. So if we do, let's just do May. Jesus Christ, there's a lot of trades here. May. There we go. So I can then just add in, insert. There we go. Just highlight that, and then you can just do like little wins, losses type caboodle, and then just do CSV. Actually, just do total, you know, total P and L. That's probably easier, just for this example. Just open that up, click that, auto sum, and then literally just get everything in May, and then enter. There we go. So yeah, in May it's been, what was it? Okay, we're only 9 days into May, but it's not bad. And then you can do it, you know, for the previous month. I'm actually quite curious. I haven't actually done this yet. Where is everything else? May, April. There we go. There we go. Click. Another 160. It's a bit lower than I thought, actually. I thought it was a bit higher. So I'd have to. I don't know where all the trades before April are, which is interesting. I'm gonna have to look into that. But anyway, that's just for your logging.
You did the last 30 days, Siam, is what you did.
Yeah.
Oh shit! Is it Oh, of course it did. What an idiot. Yeah, so I'd have to do it further. Obviously, yeah, it's me missing a whole week. Of course it's going to be more, yeah. Anyway. Yes, sorry. I'm prime proof that you can be an absolute muppet and still do alright on the markets.
Siam.
Brad, go. Yes.
Yeah. Hey. Just a quick question on time frames and trading derivatives. Let's say that you're looking at things on a daily time frame. That really work out,
Yes.
given sort of the implications of funding rate and that impact on your.
Yeah. So,
And especially like in ranging markets or in compressions, etc. You kind of accruing all those extra fees, right?
so don't let the tail wag. Don't let the funding tail wag the profitable dog. I'm just making up a quote here. So too many people are fixated on fees and funding rates and bits and bobs like that. It is absolutely irrelevant if you're placing good trades, and if you're placing sensible trades with sensible stop losses, etc., etc. I really wouldn't bother worrying about it. If you're placing stuff on the daily chart, it's most likely your hit rate is going to be a lot higher, because obviously the higher the time frame, the better. But the problem is you're going to have much bigger stop losses, which means your position size is going to be relatively low. So, for example, let's pick a random thing without. Oh, Jesus Christ. that's my phantom. Yeah, I mean, let's just say you wanted to go long and near. Realistically, you'd want your stop loss either below these lows here, or even, you know, below here. Like you're going to end up with a very small position size. And this is why I tend to operate on the 4-hour chart, because you can still be sensible-ish with your stops. But you still get a nice position size. So I did an example here today, actually. Where is... Yeah, look at this one here, Doge. So I risked a very small amount, so 0.05% of my whole pot on Doge, shorting it. But as you can see, one of the reasons is I had a very tight stop, very tight. But because I was basically putting, you know, risking like $5,000 on Doge on that trade there with a very tight stop loss, the position size I had, not position margins, nothing to do with margin, as in how much Doge I was effectively selling, was relatively large. So if I click, I can't get much resolution on this. Is Doge on here? Yeah. So I was effectively selling 1.4 million Doge coins, even though I was risking a very small amount. That's one that didn't actually do anything there. But I'll give you an example. Yeah, I think GMT was probably a good example of a relatively tight stop. I think 6.6. Yeah, it worked out roughly almost sort of $1,000 profit per percent it went up compared to that. But yeah, it's all about the position size. That's what I'm fixated about. And on the daily chart, you could end up being in the position where, yes, you'll end up being right, but you may not make that much profit on a nice move like that. Whereas with us, like you've seen on the Telegram trades, let's just take Bitcoin for example. We've made quite a lot of money with, you know, we haven't got the whole move down from up here, but what we have done is got lovely chunks of this, like boom, we had at least some of that, we've probably had most of this. Like from sort of the 5th of May, yeah, we've had at least 3 nice runs. And we're only getting, you know, probably 3 chunky bits. But even so, because we've been in and out, we've managed to get, you know, shitloads of profit through that because of the position size. But yeah, I thought, yeah, we're getting too much into the trading side. I want to try and keep this to this. Right, how long has that been so far? It's been 1 hour and 20. So, any questions on Bybit and actually placing trades on Bybit? What have I missed out? Have I been too fast? Any questions, folks? In fact, let's place a live trade, a real live trade, okay? Because I actually do want to get some money back in the market. So right now we have, let's have a quick look. See, I know. Okay, so for YouTube, this won't make any sense for you, but we have a high test here. So let's take Ripple for example. I'm going to place a real trade here, and I'm risking, I want to risk 12, and well, 1 second, about 12 grand. So 12 grand is about 0.25%. So straight away, I'm going to be putting my stop loss at 0.55, well, 0.55, yeah, screw it, 0.556. So I go to Ripple, click the one with the most, yes, just DT one. 0.556. I'll click to 100, sell short, yeah. 0.556, 56, there we go. And I can lose 20 TK. So there's a lot of liquidity with Ripple. So I can actually, I can actually move this down. Obviously, you can see the quantity is not actually moving when I click this. So I may have to just edit this. So what is that? 1,500,000. 1, 2, 3. There we go. So I can actually now edit the position size manually to get the desired 12k loss that I want if it were to go wrong. So that's 10. I can add a 5 here. Yep, that's close enough for government work. So here, placing the trade, if it all goes tits up, I'm losing 12 grand. Happy with that. Open short. Boom. Yep, idiot check. I'm happy with that. Ripple, isolated 5x, and we could always change that if I wanted. It's basically a 300k trade apparently. Mark price and the actual price are very similar. Yeah, liquidation. Yeah, all is good. And now, oh shit! And what I actually have to do now is actually, because it's a real trade, not an example trade, I need to text this out to the community. Stand by. So here we go. And then I need to take a little screenshot of this, and we got just rough. You guys all know this anyway, but
just sorry. When you're texting stuff out,
yeah,
untick the send compressed with these ones. 'Cause some people can't see it. You'll be able to, you'll always be able to see it.
Lovely.
But for a lot of us, can't see it.
Amazing. Thank you. That's probably why I don't get much resolution when I click the picture. Short 0.25% max risk. High test. Cool. Oh, that's much better resolution compared to that.
Yeah, it's meant like for, you know, if you're in a country where data's expensive or whatever. You know.
That's good. Normally when I'm doing it on my phone, it doesn't give me the option though.
Yeah, it's only a desktop.
Okay, yeah. All of these are when I'm on my phone, hence the really badly drawn, because I have to do that with my finger. So yeah, that's Ripple. At least I got a trade back in. That's annoying. Yeah, we've got lovely high tests everywhere at the moment. Sand. Screw it. Let's get back in sand. So in, and I want 1.93. Yeah, that'll do. That'll do, pig. 1.933. 1.933 is back in sand. $933, losing 6. Yeah, I'll just place 2 trades. So short, and then short. See, this is what I mean. Like that second trade, I still got the same stop loss. So yeah, right. Let's text that bad boy out. Texting that, and then take a screenshot of this one. .25% max risk. High test. What else? I want to get back to Luna. I do want to short Luna again. Wait a minute. Oh, actually, shorting way down here is not nice. I have been very icky and uncomfortable shorting stuff recently, especially as things are getting towards sort of support levels and whatnot. But I think some still has a bit of, we have a bit of value left, I think, especially Ether. Jesus, Ether 2460 31, 2460 31, 2460 31, 2460 2460 31, or 35. Won't let me do the one. 35 is fine. How much am I going to risk? Yeah, with Ether, I'm going to risk 0.5% on that one, because I'm still basically counting as though I'm sort of still in the trade. 0.5%, so 500. So it's fine. No, it's 400. So 12, 23, 80. That'll do. Cool. That's Ether. Draw. I'm getting in there. Something like that. obviously these screenshots where I'm drawing these lines are very rough, but all I'm trying to do is get you to look at it yourself. So you look at the screenshot and go, oh yeah, I see what Simon's done, and then you choose your own stop loss there or thereabouts. And obviously, in an ideal world, I wouldn't be texting all of these out because I'm losing time every time I do this. And some 0.5% max risk. And I'm not too worried about these trades because we've got a lovely profit buffer that we're sitting on right now. Ripple we've done. Binance just looks horrendous at the moment, but it's already fallen quite far. Atom is like one of my favorites. No. I am worried, or not worried about DOT. If we have a look at, I think I've already sketched it. No. With DOT, I think it's pretty much resting on a big support level, almost. So when you zoom out of DOT, look at this. Oopsie. So DOT is, I think, definitely following this support level. And therefore, we've probably got until $10. So, yeah, we could. However, looking at this on the daily chart, it's already fallen away quite a lot. So, like with a lot of them. So, shorting at these levels, I think you're in for a bit of trouble potentially. Well, AVAX has actually just breached support. AVAX, it's nice and orderly. No, I'm not going to go over the top for the moment. I just want to have some skin in the game. BSW. Wait a minute, what was that previous one? BAT. Sorry. Crow. Yeah, I've really lost out on money by closing all my trades. Like for example, Crow here. I know it was only 9 grand up there, but at the time the mark price was 0.2340, 0.2320. Yeah, so I know it's only gone 20 cents down, but a lot of these coins are still moving down from what, like for Doge, for example. Yeah, like Doge was break even at 1170. Okay, it's thereabouts. Yeah, I could probably. Yeah, I'm still going in on Doge again. Yeah, I'll go back in on that. So let's take a screenshot of that. So what is that stop loss? 1210. 1210 on Doge. 1210 Doge. 1210 on Doge. Doge. 1210. 9. Oh, okay. This is where I'm going to have to click this about 13 times now. Open short. Yeah, right. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. That's not true. 1 second. Adjust the risk limit. Sorry, whack this up to 1 million. Sorry, I thought I'd already done it on this. I knew I didn't exceed the million, but nowhere near. Let's keep on shorting. This is my only one. Here we go. Too many requests. That's basically because it's still trying to chug through all of the trades I've just slammed on its door. So how's the risk? 11. I could probably come on, give me one more. That'll do, pig. Then right. Doge. Sorry. Doge. Or as some people say, doggy. Re. Cool, so that's that. Eagle. In fact, what else was I on? What are the... So GMT, ETH, Sol, Luna, looked at them. AVAX. We were in AVAX, actually. Let's just fast forward back down here. ENS, yes, I want to short this again. So stop loss for that 50. Yeah, you could, may as well 16, 13. 16, 13. I mean, look at that textbook. Isn't that just beautiful? Head and shoulders there. I love it. Anyway, I still think it's got down to sort of $13, $14. We've still got some life in this to short it. So what was that? 16.11. ENS 16.11. ENS 16.11. Again, and that $642. I'm gonna have to click short like a billion times now. If you're watching this in the future, this is probably really boring. I'm sorry, but we have quite a few people watching this live, so hopefully those who are here today watching this live, your time is not wasted because you can copy some of these trades. 10, okay, 0.2 is fine. So 0.2, I'll leave it at that. I'm not too fussed. So ENS short, 0.2% max risk. Get the picture. Roughly there, roughly there. I'm just going to mute all. I can hear everyone clicking. Right, there we go. So that's that. Had a bit of a retrace, that's fine. Sushi is also dying. GST. That's the utility token for Steppen. I really want to short this to 0. I think this is going to be utter bullshit moving forwards. Zill looking a bit weak. I think I'm alright for now. Really, by the way, I'm not trying to do subliminal messaging with the bloody picture. It's just that I'm scrolling and it's going through some of the pictures on my desktops. So yeah, I don't mean that. Right. GMT. Last two, then I'll go through the questions. Right, that's it. That's everything I got for today. Any questions? Now is the time to hit me with your questions. Feel free to unmute yourself. I will look through the chat box as we go through this as well. Yes, James.
Is there a reason you don't do the low balls? Like split your risk up and do a normal trade, low ball trade?
Yeah. The main reason is just logistics. Like already, it's a bit of a workload for me, placing my trades, monitoring all of the trades, and texting them all out, in real time as fast as I can. And you can still do the low balls if you want. Like you can, like when you close a position, you can close bits of it off, so you can sort of take parts of the trade off. But you'll see I'm trying to think of an easy way to explain this. The answer is I do actually do it, but you may not notice it. Sometimes you'll see me placing a trade and then a few hours later placing another trade. This is me basically going in again at a better position, if that makes sense. Or to scale into it. But yeah, the low ball method is still valid if you're doing it yourself, etc. And if I was literally just trading on my Todd, I probably would.
Cool, thank you.
No worries. Any other questions?
Hi Sam, you Samuel.
Oh, hey mate, Hey, Neil.
Hi. Just a basic question, actually, because I haven't used Bybit yet. So if you're starting out, what do you deposit your currency? Is it GBP, USDT, and from where?
Whatever you want, mate. But if you're going to be trading like this, you need USDT. So you need Tether, USDT. Yeah, so just deposit. But even if you deposit something else like Bitcoin or whatever, you can always swap it into Tether.
Okay. Lovely. Thank you.
Right. Ben Green has asked, can you do trailing stops on Bybit? And what are your views on using them, especially at bedtime? So they're very clunky. I personally don't use the trailing stops on these. It's just that they're... Markets are fluid. I just don't use them. If it's going to bed like last night, I will. Most of the time, I'll just move the stops are relatively tight, locking in whatever I'm happy to lock in, and if fully expecting them all to bomb out. But if some trades are still alive by the time I wake up, then great. If not, then so be it. But I guess it doesn't hurt. So yeah, as it says, stop loss. Will be triggered when the last traded price retraces from the best price. But yeah, it's not good. I prefer a dynamic stop loss, which FXCM has, but even that wasn't too good. But yeah, this is still frustrating watching this, because as these go in profit, I know I'm missing out on loads of profit from before. Hey ho, we all learn. This is the price I pay. Because look, if those trades are already up sort of 10 grand, with all of these existing trades, they would be up a lot more by now. Hey ho, can't win them all.
To be fair, Siam, you wasn't. It retraced quite a lot. It did go backwards after you closed up.
But they wouldn't have stopped out. So they've retraced, but they've come back.
You have one that stopped out.
What was?
I can't remember which one it was.
Oh, okay.
One of them definitely stopped out.
Oh, fair enough. Cool.
Yeah, we're roughly at the same place as we started now.
Nice.
When you closed out.
I mean, GMT is still. I think looking at that thing, GMT was most of the profits, 50k, and then it was Sol and Ether, which was really.
Simon, I agree with you on the 1 hour chart, and you'll see I'm now about 80% of where it would have been if I'd sold exactly when you closed up.
It was Doge, Siam.
Oh, did Doge stop out?
Yeah.
Interesting. Oh god, yeah, that. But yeah. Any other questions? Crypto Wonder said, I'm sorry, can you go through your lock-in process again? It really depends on the market at the time, if I think there's legs in it still. So for example, if you look at late last night, I placed a whole bunch of trades. If we scroll backwards, this is all today. God, I'm sorry if I'm sort of waterboarding you with trades at the moment. Yeah, so here we go. Last night, I placed a whole bunch of trades around 11:30 at night, because I thought that we would have further follow through, and also I was expecting that the equities would open up, hopefully gapped down, and everything would carry on falling. So placed all of these at around 11, just before midnight, and I left them fully, all risk exposed. They all had stop losses, etc. But if you add up all of these, I probably had 2% risked. But I was very confident that they would all follow through. So for look at that, BSTW and all eGold. That was lovely. In fact, if we look at eGold right now, sorry, I'm on the 1 hour chart. There we go. Let's move down nicely. What was I talking? Yeah, so I left them, and then this morning I woke up, and I was like 80 grand up or something like that. So, 90 grand up. So on that occasion I left them, but most of the time, if you go back in the history, if you can ever be asked. What I tend to do is move the stops pretty tight. So what I'll then do is, let's try and find a trade that we're in right now. Unfortunately, we went from 15 grand up to minus 2 grand. But if we take a trade, let's look at Ripple. So Ripple looks like it's slightly in profit. Well, I can't actually show you an example because none of these are far enough in profit. But what I do is I go to the 1 hour chart, and then I place, move the stop according to the 1 hour chart. So invariably, you're moving the stops relatively tight. Because a sensible place on the 1 hour chart to move your stop would be a horrendous place to move your stop, let's say, on the daily chart, and vice versa. So, any other questions? Feel free to unmute yourself. But yeah, whilst you're doing that, look forward to check. You make it so that your expected loss, once your stop loss is in, is 0.25% max risk. Yes, and this is what I have to stress again. Your leverage really is irrelevant as long as you're managing your trades okay. So I always base my trades based on the maximum risk, and so whenever I'm placing trades, it's always like, nearly all of my trades, I would say 90% of my trades, are 0.25% max risk. So if you have a $10,000 account, what is that? So you work that out. So I always find 1% and then divide it by 4. So 10%, 1% of that is 100 quid. Divide that by 4 is 25 quid. So that means on this trade, the maximum you can lose, or that you should lose, will be $25. So when you come to placing your trade, let's just place any old random trade, screw it on Bitcoin, shorting it. First of all, you need to know your stop loss if you're going to short it. Let's say your stop loss is, I don't know, let's call it 3421, 342. I'm making up a random stop loss. Here, Bitcoin, you're going to lose 37 grand. Well, that's a bit too much because we only want to lose 25 quid. So you're going to have to change this. So try 1 Bitcoin. Nope, still too much. 0.1 Bitcoin. Still too much. 0.01 Bitcoin. Much better. So what about 0.02? So you then have to start playing around with the quantity. So 0.15. There we go. Close enough. So you can short 0.015 of Bitcoin with that stop loss, and you'll be risking $23. But obviously, this is why I talk about position size, because the smaller your stop loss, obviously, the higher position size you can have. But you should always do your trades dictated by a sensible stop first. I always start with the stop loss in mind. Any other questions before we call it a day?
I guess what you've really got with Bybit, would you say this is accurate? You've got Binance interface with FXCM functionality. That's the way I
to a degree.
Yeah.
It's good and it's bad, and all of its different ways. I'm sure there are better ones out there. Some people say, "Hey, check out KuCoin," and whatever. But the thing is, I'm not one of those people that chases everything. So I'm sure there's probably something out there. But at the moment, I'm effective trading the markets with this. I've got to know it. I'm happy to do the interface. Maybe. I'll look for something else in a bit, but at the moment, don't fix what's not broke. And Crypto Wonder says, so if you're $1,000 in profit and you want to lock in $500, does it make more sense to close half the trade or set take profit? That would be $500. You can do it either way. If you actually want to just, lock in and cash in that $500, then yeah, you can just close half of the position. But I much prefer, let's say you're going to leave this overnight. If the trade's in profit, why don't you just move the stop loss to the bit where you've locked in $500 via the stop loss, and that way your whole position then still has the opportunity to run in profit. That is a better way, in my opinion. Because what happens is if you close half the trade and overnight it then carries on going in profit, you're only making profit on that half position size. So it's better to, yeah, but you can only do this once, you know, the trades are nicely in profit. Yeah. Right, I think let's call that a day. We have, how long has this been? 1 hour 45, yeah, I think that's it. Lots of learning points here. Top tip, don't be an absolute fool and click close all unless you really want to close all your trades at once. Right, toodles folks. And no worries, I'll put the whole video in Telegram as soon as it's done. Cool.
Thanks, Sam.
Bye.
Bye.
Right, so let's